Hi, I'm Ramil Galani, Head of Financial Advice here at the FMA. The FMA has just released our Financial Conduct Report, known as the FCR, outlining our key regulatory priorities for the next 12 months. The FCR is an annual publication. It's a tool for us to highlight important insights from a regulatory activity in the previous year and the focus areas for the next 12 months. By publishing this report, we aim to be transparent about the key risks and opportunities on the FMA's radar and how we plan to tackle them, and to provide you with clarity on what you can expect from us. So, what does the FCR say about the financial advice sector? We firstly acknowledge that financial advice businesses help New Zealanders grow their retirement savings, source mortgages, protect their income and assets, and support overall financial well-being. The report signals our priority over the next 12 months to improve the availability of financial advice to all New Zealanders. We know that good quality financial advice has a positive impact on consumers, and this is why we are conducting a review into financial advice accessibility. We are focusing on improving accessibility of financial advice by understanding 4 key areas. Number 1, consumer preferences. Number 2, industry business models. 3, digital advice. And 4, how regulation plays a role. The next area the FCR covers is conduct in the mortgage and insurance space. Our expectations are for FAPs to be able to support consumers in vulnerable circumstances. We've seen some isolated activities by advice firms targeting vulnerable consumers, especially in mortgage and insurance advice areas. In some cases, this includes fraudulent activity. We'll focus on identifying and swiftly intervening in such cases, and more broadly, helping advisors improve their controls and support for vulnerable customers. Area number 3 for our future focus is understanding how consumers are perceiving and comprehending commissions, incentives, and fees associated with financial advice. This is really important. In our 2024 FAP Monitoring Insights report, we reported that we found gaps like unclear information or missing or inconsistent details about fees, commissions, and incentives connected with giving financial advice in disclosure materials. The last area we'll be focusing on is how providers of client money and property services handle their processes. We'll be looking at how robust their systems are when it comes to separating, accounting for, and keeping records of and reporting on client money and property. These are the 4 things we're asking boards, CEOs, and senior executives to think about. Number 1, how you're supporting consumers in vulnerable circumstances and whether you have the right controls in place to identify and address poor advisor conduct. Number 2, what measures do you have in place to ensure your clients understand the fees and costs of the products and services, including fees or relevant remuneration arrangements applying to your financial advisors? 3, if your firm outsources client money or property or custody, what steps do you take to oversee the provision of the service in the interest of clients? And number 4, if your firm handles client money or property, how robust are your processes for ensuring obligations related to separation, use, accounting, and reporting? We'll be using the FCR in our engagements with you over the coming months, and we invite feedback on how we can make future editions more useful. Thanks for listening. You can find out more about the Financial Conduct Report on our website.